as if we're not facing enough hardships as it is. Um, it's just been announced. It's been announced back a few days ago that mortgage rates were on the rise for a while. Now it's hit the highest since it had been in 2007. The mortgage rates have skyrocketed 6.7%. Now mortgage rates rose to the highest level in more than 15 years, a new high since the 2008-2009 financial crisis that adds pressure to the already cooling U.S. housing market. The average rate on a 30-year fixed mortgage had climbed to 6.7%, according to a survey of lenders that was released Thursday by Freddie Mac. It was the highest rate since July of 2007, and it marked the sixth week in a row of the rising cost rates. Now, this week's rate was up from 6.29% last week, and moves that large in a single week have occurred only a handful of times since Freddie Mac started tracking them more than 50 years ago. A year ago, the mortgage rates were only 3%. Now, the surge in mortgage rates follows a series of interest rate increases from the Federal Reserve. The central bank has moved aggressively to try to cool the highest inflation costs in decades, raising its benchmark rate 5 times this year. Now, officials have indicated that more increases are likely in the months ahead, which is going to be bad. But mortgage rates usually rise or fall in tandem with the benchmark 10-year Treasury yield, and not the rate set by the Fed. But the 10-year yield is heavily influenced by expectations for Fed rates. Now, the 10-year yield has ricocheted this week during a broad turmoil that's basically going on in the bond markets. Now, on Wednesday, the 10-year yield briefly touched 4%, which was its highest that it's been in more than a decade. But it later fell sharply that day, notching its biggest one-day decline since 2009. The uncertainty has widened the gap. The uncertainty has widened the gap between what various lenders are offering, but the Freddie Mac chief economist Sam Cater had said in a statement, the large dispersion in rates means that it has become even more important for home buyers to shop around with different lenders. The interest rates have a major influence on housing because they significantly affect a buyer's monthly payment. If you look at the big picture of where we stand today versus where we were entering this year, we're in a vastly different affordability environment, said Andy Walden, who's the vice president of enterprise research at a mortgage data firm called Black Knight. With the rates rising so much this year, some would-be buyers have given up and decided to keep on renting. Others are spending much more on their monthly payments than they had planned, but some existing homeowners are reluctant to sell, since that could mean taking on a new mortgage with a significantly higher rate. Now, Jason Carrion, who 34, had sold his home in Boise, Idaho in April to move to Southern California, where a majority of his family lives. He had refinanced his mortgage back in 2020 at a 2.5% interest rate, but knows that he won't get anything close to that now. He now expects to put off buying a new house for at least a year, if not longer, and he thinks it's a probably good time to be a renter. But Mr. Carrion works as an account executive for a software company. Now, would-be buyers are being forced to reckon with their diminished buying power in a number of ways. Now, take for example a person that's trying to buy in San Diego, California, and they have only a 3-month monthly budget, a $3,000 monthly budget for housing. About a year ago, that same buyer could have purchased a 1,373 square foot home, according to a real estate brokerage Redfin. Now today, the buyer with that same budget could only get a house for 930 square feet, which is tiny and it's not enough for me. Now, the existing home sales have dropped for 7 months in a row through August. Home prices are still rising on a year-over-year basis, but the pace of growth has slowed, and prices are starting to decline month after month. But the higher rates have also made refinancing an unattractive proposition for people. Now, applications to refinance are down nearly 85% from a year ago, according to a data that was released Wednesday by the Mortgage Bankers Association. Now, the drop-off is forcing some mortgage lenders to cut jobs or even close shop. Now, since refinancings have made up the bulk of organizations during the pandemic. The NBA expects mortgage originations to drop 48% to $2.3 trillion this year, and it was dragged down by a 73% decline in refinancing. So hold on a second here. So if you like the video, you can give the video a like and subscribe to my channel, RBW King. You can also hit the notification bell so you'll be notified when a new video comes out. And if you want to support my work even further, you can donate to my Patreon link, which you can find in the About section of YouTube. And for just a little as a few bucks a month, your donation can help go a long way. And thanks for listening.